Good morning. My name is Vladimir Tikhomirov. I'm a chief economist at BCS Global Markets, and I'll give you my view in the macro area for the coming week. The past week has not been a usual one. We have seen new developments concerning the suspected poisoning of Alexei Navalny from Germany, which basically prompted or triggered quite significant negative reaction from Western leaders. The issue of possible new sanctions against Russia has come to the fore, and that obviously had a direct and strong impact on domestic market and the ruble. The ruble that started to appreciate early last week following the decline in the volumes of sales of Russian government debt by foreigners. So the demand for FX has started to come down, and ruble started to appreciate, going to about 73 rubles to the dollar. But last week, when the news broke about Navalny poisoning, the ruble returned back to the lows that we've seen about a week or 10 days ago, close to about 76 rubles to the dollar mark. Towards the end of last week, ruble has stabilized around 75 rubles to the dollar, and basically the market reaction was also negative. Market has come down between 2 to 5% in various stocks. But the overall, if one looks at this reaction, the reaction was basically muted if one compares that to another big negative geopolitical events that we've seen over the past few years. And in my view, there are two reasons for that. One is that the market and investors have got used to this continuous threat of increase in Russian geopolitical risk, so people are taking that, as a risk that exists when one makes any decisions about investing into Russia. And the second reason is basically that we don't have a clear understanding of what possible sanctions, if any, there could be coming. Western leaders are still discussing. Russians demand more information, and apparently Germans are prepared to give the information about Navalny, his medical tests, etc. So it looks like that there could be some continued cooperation between law enforcement agencies between Russia and Germany, which is basically a good thing because it can lead to a more muted response and perhaps to far less significant sanctions, if any, than one can think. But looking forward into the coming week, of course, these geopolitical developments would be the prime factor that would determine the trends on the domestic market and in the ruble. Also, one should add to that actually other geopolitical risks that exist in the world, including US-China trade conflict, which is still developing and which has a direct impact on all the markets, including the Russian market. One last thing that I want to note was the inflation data for August that came out late last week, which basically coincided with my forecast of zero monthly inflation and a rise in annualized inflation to 3.6% year on year from 3.4% we've seen in July. This is basically another argument for the central bank to perhaps decide not to cut its rate any further. The central bank is going to meet in 10 days, and if one looks at the structure of August inflation, there are a few things. One is actually lower seasonal deflation in fruit and vegetables because of lower harvest this year compared to last year. Another one is increase in communal tariffs for the population, including natural gas. from 1st of August that had led to acceleration in the services component of consumer price index. But one important thing is actually an increase in non-food consumer goods prices, which were led by the weakening of the ruble. At the levels where we see ruble now, this pressure is going to remain in September and October, and this is yet another factor that central bank should take a note of. I believe that the central bank would extend a pause in its rate moves until the end of the year. I don't think the current rate of 4.25% is going to be changed, not in September and not towards the year end. That's, I think, all on my side. Thank you.